Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into plain English and spill the tea on what companies are really saying in their reports. Let's dive into Cloudflare's latest annual filing and see what secrets are hiding within today. We are decoding Cloudflare's 10K report for the year ending the 31st of December 2025. Get ready because this filing is packed with numbers that tell a story of rapid growth, significant investment, and some crucial decisions they are making about their future. And you know we love a good story. Alright, first things first, Cloudflare is telling us they are all about building a better internet by making things more secure, faster, and more reliable for businesses of all sizes. They see the world moving away from old school on-premises tech to cloud-based services, and they are positioning themselves as the go-to provider for this transition, the connectivity cloud as they call it. Now let's fast forward to the numbers that truly matter for the year ending the 31st of December 2025. Cloudflare reported a net loss of over $102 million. Yikes. That might sound scary, but remember they are investing heavily in growth, especially in their infrastructure and new product development. The year before 2024 showed a net loss of almost $79 million, so the loss did increase, but keep your eyes peeled. Add on that revenue growth, it is still chugging along, and that is what we'll look at next. And speaking of growth, Cloudflare saw its revenue increase by a whopping 30% to over $2.1 billion in 2025 compared to 2024. This is driven by both new customers jumping on board and existing customers expanding their use of Cloudflare's services. Their dollar-based net retention rate of 120% for the last quarter of 2025 means existing customers are not only staying, but also spending more, which is a fantastic sign. However, all this growth comes at a cost. Quite literally, the cost of revenue itself jumped by 46% for 2025. This is mainly due to more spending on third-party tech services, co-location facilities, and network bandwidth. To support their growing customer base, plus the depreciation of their equipment, added a considerable chunk. The fact that costs grew faster than revenue in this area led to a slight dip in their gross margin from 77% in 2024 to 75% in 2025, a bit of a red flag but not a deal breaker yet. Their sales and marketing expenses also saw a significant jump of 23%, mostly driven by hiring more people in their sales and marketing teams. It costs money to win customers, especially when you are trying to attract big players. The company is investing in brand awareness, digital marketing, and industry events to get their name out there. They are not skimping on innovation either. Research and development expenses climbed by 22%, which is crucial for staying ahead in the fast-paced tech world. Cloudflare is pouring money into new features and product enhancements to keep their edge. General and administrative expenses jumped by 40%, which is a bit concerning. The bulk of this increase comes from a 10% rise in headcount in their admin teams, plus a big jump in stock-based compensation expense. This could signal growing pains or a need for better cost management. On the brighter side, their interest income boosted by 50% to almost $131 million. This is good news, indicating they have a healthy pile of cash and investments generating returns. This is likely due to their increased investment balances. Now let's talk cash flow, because that is where the real magic happens. Net cash provided by operating activities saw a solid increase to over $603 million in 2025. This street-wrong performance is even more impressive considering their net loss. What this means is that while they are not profitable on paper, they are generating a lot of cash from their core operations. The key here is that the cash from operations is significantly higher than their net loss, confirming their business model is generating real cash. And that leads us to free cash flow, which shows how much cash is left after accounting for capital expenditures. Cloudflare's free cash flow grew to over $260 million in 2025. That is a 12% free cash flow margin, which is quite healthy for a company still in its hyper-growth phase. It shows they are managing their investments efficiently and turning those operational cash flows into usable capital for further expansion. Let's look at customer numbers. This is a big one. The number of paying customers grew by a substantial 40% to over 332,000 in 2025. And even more impressively, the number of large customers, those spending over $100,000 annually, shot up by 23%, reaching over 4,200. This shows they are successfully landing and expanding with bigger enterprise clients. And looking at their accounts receivable net, they increased to over $382 million in 2025. This is a natural consequence of their growing customer base, and sales volume. More customers means more money owed to them. But it is essential they are collecting this efficiently to maintain healthy cash flow. The company stated that these receivables have increased due to their growing customer base and the timing of collections. but so far it looks like they are managing this well. Cloudflare's dollar-based net retention rate stayed strong at 120% for 2025. This metric is like a super important report card for subscription businesses. It means that for every dollar of revenue they had from existing customers last year, they now have $1.20 from those same customers. This indicates great customer loyalty and successful upselling of new products and services. This is a massive strength. Now, if you look at their balance sheet, you will see they're available for sale. Securities have more than doubled in 2025, reaching over $3.1 billion compared to $1.7 billion in 2024. This shows they are deploying their cash wisely into investments that are relatively safe and liquid. This is a good sign for their financial flexibility. Here is a key financial move. Cloudflare issued $2 billion in new convertible senior notes. During 2030, this significantly boosts their cash position and provides capital for future growth and investments. However, it also adds to their long-term debt obligations, which is something to monitor closely. Cloudflare acquired Replicate Incorporated for over $46 million worth of goodwill recognized in 2025. This acquisition is focused on AI capabilities, signaling a strategic push into that rapidly growing market. The goodwill figure suggests they believe Replicate brings significant intangible value like its technology and team beyond just its physical asset. Their investment in servers network infrastructure also saw a huge jump from $488 million to over $726 million in 2025. This massive investment underscores their commitment to expanding and strengthening their global network to support more traffic and new product offerings, like AI workloads. Now let's talk risk. Cloudflare is very clear about the challenges from intense competition and rapid technological changes to potential economic downturns, geopolitical tensions, and cybersecurity threats. They face a lot. It is basically a jungle out there for tech companies. One major risk they highlight is their history of net losses and the uncertainty of achieving future profitability. While revenue is growing, costs are growing too, especially in sales, marketing in general. Administrative expenses, a slight dip in gross margin due to rising costs, is also something to watch. They also acknowledge the power of their dual-class stock structure, meaning a few key individuals hold most of the voting power. This can limit outside investor influence and potentially depress the stock price. Their risk factors are extensive, touching on everything from potential service disruptions and security breaches to issues with third-party co-location facilities and ISP partnerships. Any hiccup in their vast network could have serious consequences for their reputation and customer trust. The auditors KPMG are giving Cloudflare a clean bill of health for their financial statements, and crucially for their internal controls over financial reporting. This means they are confident in the company's financial reporting processes, and the accuracy of the numbers presented. This is always a positive sign for investor confidence. Looking at the balance sheet, Cloudflare's assets have more than doubled from $3.3 billion to over $6 billion, mainly driven by that massive increase in cash. And investments, thanks to that new debt issuance, they have also seen a significant rise in liabilities, with a large chunk now classified as current due to the convertible notes maturing sooner, which is something to keep an eye on. In conclusion, Cloudflare is a company in hyper-growth mode. They are investing aggressively to capture market share and expand their offerings, particularly in AI and developer services. The strong revenue growth and healthy free cash flow are positive signs, but they are still operating at a net loss, and their costs are rising rapidly. Investors need to weigh the innovation and growth potential against the ongoing expenses and the significant risks they face. The company's direction is clear. They want to be the backbone of the internet for businesses and developers worldwide. Their success will hinge on their ability to manage these growing costs, scale effectively, and continue innovating while navigating a complex global landscape. What is your take on Cloudflare's latest report? Are you buying the growth story or worried about the rising costs? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more deep dives into corporate filings. You can also join our Discord community linked in the description for more exclusive content and discussions. We really want to hear from you, so jump in and let us know your insights. Thanks for watching, and we will see you in the next episode.